Hey, hello, hello, hello,
Good
everybody.
morning.
um, I guess we'll start. This is the Option Pit Live on the Tradier Network. It is I, Andrew Giovinazzi, your other option, Director of Education, OptionPit.com, with Licia, former SIBO floor trader,
As are you.
and also, as I am, I guess, and also our director of Are you director of technical analysis? I
That
always
sounds good
give
to
you.
me, Andrew.
Sounds good
Sure.
to you. And but we actually just call her Queen of the Candles because she is one of the few people that reads charts and makes money doing it. So at least that I've met. Today we actually have a big show. I got to read all the stuff here. So we're going to talk a little market update, how the news coming is affecting VIX. Licia will have some picks for us. I'm going to talk about Nancy Pelosi using the option fingerprints. So we'll cover that. Amazing. And after that, my trading vehicle. We'll see what kind of lead in I get. I'm giving Licia a little head start on that. Mark is out on assignment. And then we'll wrap up the show. And I guess that gets us going here today. So anyway, I guess the best part of the show is starting with Licia and the charts and what's happening today, because that's my favorite part of the show, because I get to sit here and watch her do her stuff and see basically what's been interesting over the last week and today.
Yeah, we got a bull rally on our hands, a bull market, right? Luis, if you can show we made new highs yesterday. SPX. Did I not present, Luis? I think I did.
You're up there. You're up.
Okay. Oh, good.
I see you. Yep.
New highs in SPX. According to the pitchfork, 62.31 could be in the cards. We continue this kind of rally. We may not head straight up there, meander a little bit, but yeah, looking higher, higher. The bottom of the gap from yesterday will be support today, 60.73. And then below there, 60.5, which totally makes sense.
And all of a sudden, doesn't it feel like 6,000? Again, I thought 6,000 was going to be a magnet for a while, just because, like, waiting for Trump coming in, everybody's waiting, and there's more economic news we'll talk about, but like we rallied so much on what might happen, and then now we needed to see some stuff happen. But I guess the Doge just started right away, just halting a lot of funding, halting a lot of stuff, pending review. Like, it kind of hit the ground running. So at least from that point of view, there's some seriousness, like you and I have agreed here about every show, to cut some of the government spending. Something.
Well, do you think we got a little boost? I think Trump was a little too aggressive yesterday in Davos when he said, I demand rates to be lower. I'm not sure he said I demand. He said something pretty strong, though, that rates have to be lower. It's like, dude, you can't just you're not that powerful.
He still is. He still is the Donald. So there's what was it? Scott Shelley gave a talk at Option Pit like in 2017, I think 2018. He's like, well, there's good Donald and then there's bad Donald, and just like, I'm gonna let rates go down. Yeah, well, that doesn't work. It doesn't exactly work like that, but we'll see. Yeah. We'll see.
He does pay attention to the market, though. He gauges his success on the market, which, if you'll listen to him here and there, he does say that. He is a fan of a higher stock market.
And positive policies, right? So, and the U.S. generally works. I mean, almost every president, the market goes up unless they do something to kind of, screw it up big time. So we'll see, hopefully, right? We'll see a higher market, but I see the top of your pitchfork, and that's literally an iron condor strike that I'm sure.
Really?
Yeah, well, I went with class yesterday. I told the students, like, this is one of those iron condors where it's down a little money and it's in danger of being now down big money if
You go that high.
On. So I don't like the fact that it's sitting at the top of your pitchfork, although I kind of struck it that way, but it was 150 points ago, SPX.
Amazing, right? Amazing.
And we're straight up. So I thought we would have it, and that's in a week. So
we also have to remember as the 6,000 gets bigger and bigger percentage wise, 100 points on the SPX isn't as much as it was before.
Not at all. Not at all. It's like it's a blink.
It's like, oh my God, it moves up 100. Well, wait a minute. That's really not as much as it used to be.
Or down 100. Do they even go down 100 anymore?
They have a little bit, only occasionally.
Yeah, been a little bit. All right. So
speaking of
more charts.
Yeah, I just want to remind everyone that the tariffs, he's kind of pulled back a little bit on the tariffs. And I think this rally, major league rally in the dollar had a lot to do with his rhetoric on what he was going to, the tariffs he was going to impose on everyone else. So he has kind of pulled back on that. I think people are waiting for more on that. I think he's might be maybe using it as a threat or as a negotiation, hoping people come in or the countries come in and acquiesce to what he wants, right?
Right.
So that did help with the dollar pulling back a little bit because he hasn't done it yet, right? He hasn't like come out guns a-blazing like everything else he has on the tariffs yet.
So when is that big red candle, was that the day he was inaugurated or just the week before?
That was Monday.
Okay. So
that was Monday, the day of inauguration.
So it's like a lot of things, buy the rumor, sell the news. I mean, there's a reason some of these Wall Street sayings.
It's true, right? They're true.
So it's not like we haven't seen them in the last, since we started trading a couple years ago.
Right. So everyone, with that dollar, look at how we're getting a boost in gold. And with his talk of lower rates, gold is taking off again.
No surprise there.
Yeah. New hot. Well, it will have resistance here, 27.93 at the previous high. This pitchfork will take it to 28.22. So.
And I was actually looking at gold volatility a couple days ago. And let me see if it's still, yep. So realized volatility for gold is basically in the bottom of the basement, and implied vol for gold is almost a 1 year low. So the market is, they're not expecting a lot to happen on that front. So it might be an interesting trade, although that's not my vehicle trade, but just for people to know that option prices are very cheap out there.
Nice.
Now, what's going on there? That's a crazy chart.
Well, that was GLD.
Okay.
GLD with the implied vol. You're right about implied vol.
Yeah.
Down here.
And then realized vol is like, it's almost like nothing's gonna, when gold gets that low, I view like low volatility in gold is generally bullish in stocks. I don't know if it's, that's just an observational thing. Generally when like gold volatility is high, people are freaked out, so another case, I guess, leg under the table for the bullish case for stocks, which it's hard to believe. Now how about the big daddy stock? Well, I want to look at Q with you and Bitcoin as well.
Yeah. So he came out. I thought Bitcoin might have a bigger reaction to his. He pretty much said they weren't going to do a government coin, right? So I thought
that was very big.
I thought that we'd get a bigger reaction in Bitcoin, but I don't know. Maybe
I think was that a campaign promise too, like, not having the digital coin that the government can like turn your money off at will. Yeah. I know that was a big civil libertarian thing, but it appears they're gonna go see where the cryptocurrency land takes us a little bit more.
Right. And talked about having reserves of crypto and government reserves. But the fact that they weren't going to go for a government coin, I thought, I don't know. But maybe it's already baked in. You know, we had this big rally.
Right.
Haven't been able to clear the previous highs, but we're right there. We're right there.
Yeah. When you had those big lows in crypto, what was like right to the left of the graph when you had that huge up candle? Was that up candle the election?
Over here?
Right. Yeah.
Yeah. Yes.
Okay.
Right here.
All right.
There's the election.
I mean, so you would have to think the market has been looking for some positive crypto news out of this. Now,
yes,
the strategic reserve idea would be they worked at what they form a committee, which again interesting, but again the Bitcoin 100,000 is I guess it is. How long can it keep going up? It's one of those things you don't want to short. Basically, it feels it has a mind of its own.
It will have a slow march higher, I believe.
Well, actually, we almost have a Bitcoin thing, but it's not quite. Well, it's called the Qs. So I've been doing a little research for my, for option fingerprints when we lost Flash 5 and all that. And I was just kind of curious what the market cap to revenue was on some of the bigger tech stocks. Like, so for the Q to get this high. So Apple's 10 times revenue, Nvidia 10 times revenue, Microsoft 10 times revenue, Netflix 10 times revenue. I mean, I think at least half are 10. Now, I know these companies are making, huge money and whatever right now, but like when we were younger traders, like 90s, 80s, well, late 80s, but 90s to like 10x revenue was like a small, to me, that it was like, okay, the company's got a $200 million market cap and they're trading 10x, like something like that. Now you have a company, you have $3 trillion market cap, which is 10 times revenue. Like that's a big number. It's like it's swallowing the whole U.S. economy with the market cap almost, with a few stocks.
Yeah.
And maybe and right now the market, I believe with the Q is like, these are the companies that are going to run AI, and then that's it. That's kind of how things are pricing in my view. Now, does it mean they can't go higher? Sure, they can go higher, but it's still like there's substantial valuations in those stocks right now, which also means there's a lot of stocks that are probably undervalued, but that's a whole.
There are stocks, and I have one of those stocks that have been beaten down.
Okay.
The chart on the Qs, though, Andrew, it hasn't even reached its previous high.
Again, interesting, right? Like you would think, right? So the market is definitely pushing financials, some industrial stocks, oil stocks are coming back a little bit. Like, so there are other stocks that are now making a move, but it is interesting once you start to butt up against these, what I just think are like pretty solidly valued companies. It's like, where does the Q go? Like, what are the stocks that are going to make it go higher? And just for fun too, can you just pull up Apple? I would like your thoughts on Apple, just because that stock has done well. It's done that, which is why the Qs aren't making new highs.
Crazy, right? Bottom of the pitchfork, top of the pitchfork, bottom of the pitchfork. I think if it holds 220, clears this gap here, 228, I could totally see, because I'm bullish. Everything looks bullish to me. I could see Apple coming back to the top of the pitchfork in March.
Okay. Like if they have any kind of revenue growth or earnings growth, I think people will be, again, I could see that happening on this earnings.
It's got to hold 220 though.
Okay. So that is a good point, a good inflection point for people. All right. So let's see here. We went through, okay. I think we hit our stocks, like the big, last one, oil. I think one more for our list.
Now, to me, oil, when I try to think about it, is tricky. He's trying to lower the price of crude, but your general first thought is, and correct me if I'm wrong, anyone out there, the higher price of crude helps the oil companies, right?
Yep.
But they're also getting a boost by drill, baby, drill, right?
Right.
So we may not see crude go higher as quickly, but the stocks could probably go higher. Am I wrong in that, Andrew? That's how I'm thinking
I
about
think
it.
well I think for the exploration and producer stocks, they can make a bounce. Anytime oil companies can sell their reserves for more money, they're going to do better because they
Right.
mark those reserves so low. And also where our exports go, like the U.S. exports a lot of crude now. Like it's just different level, different grades of oil that we drill with. But I think overall, drill baby drill is still bullish for oil stocks.
I thought so too.
Because the world's a big world.
Yeah. Yeah. So look at my crude futures. This median line here is held back here in December of 23. Here, August of 24. It was resistance back here in last November. We broke out after consolidating on it for a week or so.
Mm-hmm.
Broke out, resistance up there on that old pitchfork, and now the median line back in play. So I have pretty good support here, which looks like we're testing this morning, 73.81. Going back to 23. So
we have a couple of things
that
at
area
inflection
on the crude futures. Pardon me?
I said we have a couple of things at inflection points right now.
Yeah.
All right. So if we move on to news, I just have a slide here. If Luis wants to share my screen just for a second. So one of the best traders in Congress happens to be Nancy Pelosi. Did you know that?
Funny how that works.
And I just saw thing where AOC, she was on, like, somebody was interviewing her for Twitter, somebody's doing an AOC interview, and she's basically saying that congressmen insider trade all the time. And I think she's a fairly honest person, regardless whatever politics, but that's like the first thing she thought of. But anyway,
well, she's like, hello, people. Yes, it happens all day, every day, always has. That's probably what her point is, right?
And that's exactly true. And it's funny how it has not been outlawed, right? So it's outlawed for everybody else except for somehow congressmen. So anyway, but this is what I thought was interesting. So at Option, we have this. I have a product called Flash 10, Flash 5. Part of the product is watching accumulated institutional order flow. So if you're looking for stocks that, how does a stock get hot or how do they grow? Institutions like buying longer term options. And it just so happens, it was just funny, right? That a sitting congressman who returned 90% last year or something like that in 2024. How's she do it? How does she do? Well, she uses long-term options, right? So instead of buying the stocks, she buys contracts that are expiring in 2026. So just the idea of the reason why institutions, and I know Licia and I were around when Leaps first started. Institutions like buying 1-2 year options because they're going to buy them and they're going to hold them. So when institutions get interested in a stock, they start to go to those longer term 1-2 year options. So anyway, we'll just call her one of the more sophisticated, not an institutional trader, although she works for an institution, a relatively big one.
The money that they're shuffling around, they could be an institution. I read a headline that they had moved $38 million worth of stock before the inauguration. So
I would say that's a large
institution.
Yeah, that's certainly a high net worth retail trader. So anyway, that's that. I just wanted to hit that as a subject. And then oh my gosh, we're running past a little bit. I want to do one quick.
Are you going to tell us about your Flash 5, Andrew? It starts today. I put the link in the chat, everyone.
Oh, okay.
Today,
Yeah.
it's almost your last chance.
Yeah.
It starts today.
We put trades on, and the Flash 10 program, again, using the option institutional fingerprint. We have 5 100% winners. I do all the trades myself, of course, after. And our other 5 trades, 4 are up money and 1 is down money. I'll tell you the down money one is Intel, which that's a whole nother subject. But anyway, but at 9 for 10 so far. So anyway, it is a little process, but we're doing putting on the trades today for Flash 5, and the product will be closed after today because these are, like you see with what Nancy was doing. Stocks go to a place, institutions pile in. That's the opportunity. We buy some calls, and we just try to ride the coattails of the institutions. So far, hey, 500% winners, not too bad.
That's fantastic,
5 out of 10.
Andrew.
So paid for all the premiums, paid for the product, and we're basically riding till the end of the year for a credit. So,
and Andrew, you can't ask for better than that, quite honestly.
It worked out pretty well. I'm pretty happy with it. So
fantastic.
That's why we lost Flash 5, because the students basically are like, dude, can you do more of this? And I go, okay. All right. Well, all right. So I did. Now, one thing I want to point out just real fast here, and then I want to get to Licia's stocks, is SPX has been rallying, but volatility has been rallying as well. I think I've got nope, I got to pull it up. So again, just looking at the rally we've had over the last week, I'm going to go up to like the 6200s here. So basically, I just want you to notice. So these are option prices for the 6200 calls, VIX sensitive, February 21st. And, these option prices here were $7 and they hit $40 yesterday, right? So that's 7X on the calls. Woohoo, right?
Yeah.
Now, from this lower level, vol was higher. This was kind of pre-inauguration. But since the inauguration, vol bottomed and has not gone down in this latest rally. So when these calls basically ran from $11 to $44, the volatility has increased in out of the money calls as we've rallied. Generally, again, when we were traders, stocks rallied, SPX rallied, folks would come in and write calls like crazy. I'm not seeing that in this rally. This is kind of a buy call rally. And that's why VIX has not, got down to maybe the 13 handle, which is what you usually expect in all-time highs. So we are rallying. It's a pretty solid rally, but it's a call buying rally, which to me, it gives me a little pause. I'll just say the rally gives me a little pause, just because, again, it's not something I'm actively shorting. I'm still very long stocks, but from a trade point of view, I don't think the volatility is done basically when they're buying calls. So I will just say that with VIX, and that's why VIX is not going down, because volatility at the strike has really not gone down in about 6 or 7 days with this rally. So
now, in my mind, I think of it as, vol's usually going up as we go down because people are running for the puts, right?
Mm-hmm.
The put skew is what becomes skewed, and everybody runs for those out of the money puts. Now, when they're trying to buy out of the money calls, to me that you see that in those stocks like, those high flyers like GameStop and the short squeeze stocks, right?
Right. Yep.
You see that call skew, and those stocks do go higher. So you think that everyone running for the calls out of the money calls is going to be wrong, Andrew?
I don't think they're going to be wrong. It's just in general, when rallies are kind of what I call like a low vol rally, where the market, those days you sit on the SIBO floor and pretty much taking a nap, but the market just keeps going up and all the premium dies.
Yes.
And you kind of those, yeah. And those rallies would last a long time, like a year,
Yes.
like years, right? You're into that low vol rally. And it's just, this to me is more like the meme rallies, like you said, in 2021. Remember when vols, all the skews were inverted, meaning those upside calls were more expensive and people were just buying calls because they were expecting higher, which just the short answer is I think this is a high volatility rally. Changes the way I traded a little bit. But it's a high vol rally essentially. And it's more like, like 98, 99, 97, when we just kept going up.
Yeah.
And when retail is buying out of the money, 6,200 calls, or institutions are buying 6,200, that's saying something. So anyway,
Good observation.
But that's where and now actually I think it's time for Licia and her, because we want to hear what Licia's stock picks are. So Lewis, if you flip it back to Licia, she's got some ideas there.
My first on the list is Merck. Merck has just been pounded. And I know RFK is going to come after the pharmaceuticals and all that, whatever. But I think Merck is due for a little pop here. It may not reach those previous highs. Excuse me, but we do have a double bottom right on my support level. And 2 days ago, we have a nice little change in trend doji with confirmation yesterday. I think Merck can trade back to 100 in the short term.
Okay.
I would use a close below 95.5 for a stop loss.
Okay. So they're probably the healthcare company. Oh, all right. Alicia, your camera's off, just in case.
Oh, it is?
I think so. Somehow the camera shut off.
Oh, that's weird.
Live TV.
I haven't done anything. I think it's my feed might be slow, maybe. I don't know.
Okay. But we see your chart.
With Merck, though, there are earnings, the 4th. So I would get out before earnings. Earnings are always a catalyst to trump the charts. So
they certainly are. Wow, this Merck was like $125 in August. It's been a long, slow slide since then.
Yes. So I just like a little pop before earnings is what I'm looking for there.
Okay.
I know this is both of our favorites is Portillo's. Now, I'm not long-term like you. I'm more of a short-term trader. It's 3 times now held my support, triple bottom, nice rally. And look at this bull flagging right at the resistance. That's just a consolidation, bull flag, gearing up to trade back to these previous highs. I think Portillo's can trade back to 1385.
That would make me very happy. I am very long this one. My last, I was put some 11 puts that I sold, which I'm not complaining about, at least today.
Right.
But you can see, like Licia says, it has tested the bottom 3 times.
Yes.
But it's like anything, things are out of favor. When Portillo's went public, it was $55 stock or whatever. People were pretty jazzed. So anyway, yes, I'm hoping for it. And this is actually on my long shots list. No surprise.
Okay.
Yep. So it is a flash 5 potential candidate. If you go to optionpit.com or the link that Lewis posted, I have a list of stocks that I'm picking from for our next go round, let's call it.
Yes, and that's today, right?
Yeah, today I think 1 o'clock. 1 o'clock is it, and after that, everything is shut down. So
my final one, Andrew, and then I'll let you take us for a ride in your trading vehicle. Silver. I think silver has not been able to join in that gold rally. I think above here. It's ready to trade above here today, above 28, like 28.15. I think silver can rally to 29.40.
Wow. And cheap calls too. I'm looking at it as well. Wow.
Yeah. So I like silver above 28.15
And do you see like silver rallies? Like silver is kind of economically sensitive too sometimes, as far as like, okay, silver demand and everything. So wow, but very, very inexpensive options, like year lows.
Yeah.
Wow, that's actually a nice that fits in the shopper. You like shopping for bargains, so
Yes, I do. We do.
that is a
Also, real quick, also on your silver chart, MACD is just crossing the zero line on the histogram. That's a bullish signal too.
right now.
The more evidence, the better for your
I
argument.
know I'm
right?
gonna write. I have to write now because it gives me stuff to look at right early in the morning.
Good, good. Feel free to use it, Andrew.
I do. I use all. That's the best thing about Option Pit is I get to use everybody's ideas. I get a stream of, because I have the pro feed. I get like I don't know, like 6 or 7 ideas a day.
Our pros are phenomenal.
So anyway,
where are you taking us to today in Andrew's trading vehicle, Andrew?
Okay, yes, my trading vehicle. I am taking us on a quick tour of like the idea of fingerprint. So those of you want to share my screen real fast. So this idea basically came from being a market maker and watching institutions accumulate options. So you're trading, right? When you're floor trader, you're really kind of clued into what's going on, right now. But over time, I realized, wow, calls I would sell, leaps, that I thought this is the dumbest call purchase ever. And I would, sell the leaps, hedge, trade, whatever, not think about it again. And then at the end of the year, I realized the leap I sold for $2 is now $20. So, and this is over time, the light bulb goes on, like maybe there is something to this institutional long-term buying thing. So what I do is I made it a practice to kind of follow when stocks look interesting or when there's long-term institutional buying. Okay, I'll start to look. So this is an example where basically when everybody was scared and hiding under their desk in October 2022. So just give you a little idea of the amount of volume here. So the volume here is a yellow picture. I'll do this relatively fast. But what happens is in order for stocks to go up, people have to buy them. You can't really see what people buy in equities, right? Except for the stock price going up. But in option land, right, the institutions that hold open interest, they don't close their calls. They buy them at $2 and they write them to $100 or more. So what happens here is you're seeing, from basically the idea is nobody cared because everybody was freaked out. And then everybody got religion literally 4 months later. And then institutions start buying a lot of leaps, tons of leaps. And by the time the stock is 446, again, all of these numbers keep blowing up, like blowing up. And you have a lot of buying. And I think by the time NVIDIA is 1,000, the open interest on all the in the money calls soars, right? Because there's just continual long-term buying. And that is the idea of using it just as one place. Okay, where do traders care? And generally, for a short-term trade, you look at some of the, big money flow, the flow going in and out of short-term stuff could be a good, great indicator. But if you want to make longer term investments, like, okay, who's piling into the long-term options? So I just came up with a little system there to help me look for those stocks. So the stock I have today is, of course, I need to find it here. So for my fingerprint today, and I think I lost my slide deck. Come on, Andrew. Whatever. I can't find it. All right. I lost it. So my trade today is going to be Walgreens. So what I have noticed here is there's a couple of things going on. So huge earnings candle here, potential turnaround with Walgreens. What I have noticed here is, again, pretty good size fingerprint. This is on my long shot list. it is going through some troubles again. The federal government, the DOJ, under the previous administration, is suing Walgreens for prescriptions similar to CVS, right? Now, this was what CVS did. Again, but decent earnings, Candle, a couple, but all of a sudden this I believe the lawsuit kind of hit here, and then it did this. But now it's kind of coming back as I believe as things develop. I think Walgreens will follow a similar path. So right now, Walgreens is kind of here relative to the suit where CVS was. So there was a substantial increase in the last 6 months in Walgreens option buying in the in the long-term options. So to me, that means I expect that stock to be higher in 6 to 9 months. Ultimately, for stocks to go up, people got to buy them. Institutions got to be in. It has to be on an institutional list. How do stocks grow? That's how they grow. So I don't try to make trading very complicated or investing very complicated. I'm just looking for the opportunities and then ride the coattail on the opportunities. One thing too interesting about Walgreens at one time, and not very long ago, at the end of COVID, it was like a $55 stock. At one time, it was a $100 stock. When I believe when they were going through all the tax, they were trying to switch to Ireland or something, and to get a tax break, whatever. And the stock was like $90. So is it going to be a $90 stock? I don't think so. However, okay. It's $11.70. Could it be a $20 stock in a year? Possibly. So anyway, that is the idea of the option fingerprints. Again, getting used to, if you using long-term, the Nancy Pelosi, it works for her, buying long-term options. Good timing helps, and riding them higher. So that is my trading vehicle, the option. We call them option fingerprints at Option Pit. And there you go. There you have it. Alicia's back. Lucky for us, she's back. Her camera's working.
I like it, Andrew. Here's my chart on Walgreens.
Okay. Lewis, can you show Alicia's screen?
So you're looking for 20, huh? 20 would take it up here. Well, that's 16.
And the funny thing is, like, it was 20 like at the beginning of 2024. Like, it's amazing how once the market hates a stock, they hate it.
They can really hate it. You know what? I have 20 way up here as a support level that it just broke down. So yeah, 20 is a great target, Andrew.
Good. I hope so.
Yeah.
So that is the idea of basically, again, a lot of stocks, not all stocks go straight up like the Magnificent Seven have, right? Going to, right, 10 times revenue. Not all stocks do this. Or like Walgreens trades at a fraction of revenue.
How about June? You good with June?
June is good. I like June. I don't mind January 2026 either, but there's definitely looking out there. I don't want to think too much about a call purchase once I make them on like the long-term stuff. Short-term options you got to watch. Long-term options you generally don't. So it's up all the way. You could trade short-term, you could trade medium-term, long-term, but Flash 5 is definitely more like a buy options and sort of let time work it out. So same system I use for Flash 10 that has gone extremely well. And it's something I've been doing for a long time anyway. Basically, when you just hunt for stocks, how do you hunt for stocks?
Good strategy.
Yeah. And so
obviously,
for today,
9 out of 10.
Not too bad. Not too bad.
Fantastic, Andrew.
So
got to join today, this morning, before he.
I know, Licia, you can put the link up there somewhere, or go into optionpit.com. Yep, there we go.
Thanks, Luis.
And what's happening today? What do you think is going to happen today? Because we have the Fed next week. We've got tariff day on February 1st. You know, people are buying calls in SPX. Vol's going up. You know, what do we look for today here in the last couple minutes of the day?
I'm thinking, like you say, next week's a big week, lots of earnings and the Fed. I'm thinking after yesterday's nice strong, we meander up, not to talk like Mark or sound like Mark. I'd say we meander up to 61.50, 59.
Okay. Yeah, I would say today's like an inside day, 25, 20, 20 points SPX, maybe up or down. There's no real news. I mean, Trump threw his Davos thing down yesterday. The market's kind of reacting flattish. And we're in the put up part of the market part where now we have to see the earnings again. All those Q stocks, the Megs, all the great eight, right? Adding Broadcom to it. They need fantastic earnings. In order for those stocks to keep going up, those earnings have to continue to be, they got to just keep, they got to keep performing because those are some expensive stocks at this point.
They need to be great, right?
Yeah, they need to be some, the eight need to be great. I guess that's a good place to end the show. I think we just meander. I don't think VIX does anything really. I mean, we could have a shock and it goes down, but I think the way SPX is performing, it's going to hold up likely through the FOMC, and then that will be the big relief. Likely be some kind of relief, and just how much we jump after that is the question. But I don't think there's going to be too big of a surprise out of it, just given what the data was at this point. So that's what we have. We have a meandering day with a couple of very interesting stocks coming up. So we like Portillo's, Merck, Silver, and Walgreens for a longer term. So look at all the ideas people get just by showing up. It's not too bad.
Better than a poke in the eye or whatever.
It is better than a poke in the eye. So anyway, I think that wraps the show up. So for Licia, Queen of the Candles, the Duchess of Doge, runner of many things at Option Pit, 0DTE, Option Shopper, and me, Director of Education for OptionPit.com, runner, I don't know how many products at Option Pit.
Yeah, very nice.
A few, 5. Thank you for being here, and we'll see you next week. Have a good one.
Thanks, everyone. Have a great weekend.
Bye-bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.